Well, hi guys, here is Ludo from Trading Academy. Just would like to introduce the topic of today, and today we are going to be talking about price action and how you can actually take advantage of this technical method to find an edge for your daily trading. Well, just would like to give you a little bit of insight of who we are and how we work. We are a trading academy with the mission of educating our audience to become elite trader, and we operate within our official website and our social media pages by posting our analytics, strategies, daily trading idea, nonetheless our weekly webinar. Therefore, if you find the content of this video interesting and added value to your trading portfolio, please do not hesitate to subscribe and press like to our Facebook, Instagram and Twitter page. Do not mention that we have a huge presence as well on our YouTube channel. Well, as in today, we are gonna go through the price action, which is gonna show you how without fundamentals and indicator you can still bring back home that profit you always wanted. Well, today I'm gonna go through a little presentation and a little bit of an examples within daily real-time chart. Let's move on with the presentation.
Well, as in today, I'm gonna go through the price action strategy for Forex and how to effectively trade using technical analysis. Well, I would like to start off by giving you an overlook of the contents we are gonna go through today, starting off with what is price action and how you can effectively trade by using this technique, finding hotspot within the markets. Then I'm gonna go and explain you what are key levels and those levels that represent those hotspot you wanna check in order to entry and exit the market successfully. Last but not least, I'm going to explain what is a price pattern and how to use this shape that constantly repeats within the Forex market and entry and exit the market bring you a lucrative trading session. Well, but what is price action? Well, price action trading is an analytic method to spot basic price movements of any given security, allowing traders from all over the world to generate market entry and exit signals. Price action allows traders to spot where liquidity and price volatility are at their highest, and by recognizing these areas, traders will have an edge to kill trades every minute, every hour, and every day. And because price action is not taking into account fundamental analysis and as well analysis of indicators, traders who likes to trade within this technique use volume to better understand whether the price of a security is going to have a bullish trend or a sell-off bearish, and as well key levels, which we are going to see in the next section. But by now, I want to bring you to a real life chart for you to better understand what and how to prepare trading setups using price action. Let's move on. Well, let's take a look closer to a real life chart. I picked USD versus Japanese yen. Well, I just want to show you how a technical trader and a trader who likes to use price action within intraday trading should behave and what kind of tools he should be using to better understand and anticipate the price movements in order to be more consistent within his trading session. Well, let's have a look over here. For instance, here we can see a big consolidation where is a range of highs and on lows very well determined within a range. As well, it is very important to build up key levels, which of course we are gonna be much more deeper in the next section of the presentation because those are very crucial in order for you to entry and exit the market consistently. Trend line such as those ones that help you to follow the trend from, for instance, a shooting star like this one to morning stars like this one. And as well, like trends line can help you out to better understand where the trend is broken. We can use it in this case. We can use it in this case again, and we can definitely use it again maybe in this case. So like trends line gives you a really much of an idea on how the trend is going and when that trend might be broken out. Well, this is what tools technical trader uses while adopting price action methodology. And now I would like to bring you to the next session, key levels and how to build up those levels, which is crucial in this particular subject. Let's move on. Well, as the second section of our story about price action, I want to show you how to build up levels and how crucial they are to better understand price movements within a currency pairs or again with any specific security. Well, here I highlighted some areas for you, and those are the area which I believe in this particular context, US dollar, Japanese yen, are very important to be highlighted in order to be successful and consistent within your trades. Well, I believe that this area and this area, we can call them support level. So support level is the area where the price tends to find support when it falls. And usually, once it reaches this area, price will bounce back, meaning that there's gonna be a lots of buying situation. Well, I would like to also to say that once the support level is broken out, usually the price movement will carry on until it finds a new support area. Well, on the other hand, this area, this particular area are called resistance level. And again, resistance level is when the price tend to find resistance once it moves up. Again, these are area which will be very hot, and therefore once the price reaches that specific zone, it will tend to bounce back, driven by a sell off. Well, as well as the support level, when the resistance level is broken out, the price is going to move up until it finds a new resistance area. And we can see it over here, for instance, while moving our chart a little bit, you can see that once the price has broken out this specific level over here, price is moving up when finding another resistance level and moving down over here. It is a very easy concept to understand, but very crucial if you want to trade consistently. Once you spot the key levels within the currency pairs or the security you want to trade, you should be looking for pattern. Therefore, moving on to the next section, I'm gonna introduce you what is a price pattern. Let's move on. Well, starting off with patterns, when defining patterns, we refer to a specific and recognizable shape of price movement that is possible to identify by using trend lines or curves. Well, these patterns are subdivided into two categories, and the first one I want to describe for you is the reversal. Well, this pattern group signals and tell us that there is going to be a change in market direction. Therefore, bullish or bearish trend are running out of steam. And as well, the main trend direction, therefore, will have a pause before changing direction. Well, then we have the continuation pattern group, which is a price patterns that highlights a temporary pause from the main trend. Therefore, when we are seeing a bullish trend posing up, it means that we could come across a continuation pattern, meaning that that bullish is recharging energy to shoot again on a much higher price movement. Well, on the other hand, a bearish as well can take a pause, giving us signals through patterns and then keep moving on its sell off. But let's go and have a look on the main pattern that we can match within these two categories. Let's move on. Well, the first pattern I want to go through with belongs to the reversal family. This is a head and shoulder pattern, which is one of the most recognizable and most popular among traders. Well, head and shoulder patterns is a very well-known chart configurations that consist in three peaks: first shoulders, head, and second shoulder. But I just would like to move on a trading chart and show it to you how this pattern stop one big direction movement, bringing another direction movement after it concludes its own configuration. As you can see over here, we have a very well distinct sell off and a downtrend, and here we have a posing break before there is this big bullish rally over here. Here we are having a look at the USD Swiss franc currency pair, just for your information. Here we're gonna have the first shoulder characterized by this consolidation over here, as you can see, and then a false breakout, which is the head, so second point the head, and third point the second shoulder, as well on a consolidation. And this pose will bring us then on the reversal. It is a very easy and very popular pattern to spot and very helpful when analyzing a changing direction situation in the stock or in the forex or in the crypto or in the future market. Well, let's move on within the second belonging to the reversal family. So the second reversal family pattern that I want to introduce you is the double bottom. The double bottom is shaped as a W on a chart and as well represent a scenario where the market is gonna try to reverse the price movement and the direction. Well, this occurs when the price tries to push, breaking out the support level, however is denied, and making a second attempt which is denied as well, before turning into a changing direction for the specific financial instrument we are trading. I want to show you, as the previous one, on a real chart. Let's move on. Well, over here we can see specifically that there is a bearish sell-off, and here over here a very great and important support level. Price try to break out this line, however it's not possible and is denied. Therefore, again coming back and try again to try to break that support level. And as you can see by the level of this week and or these dips, sorry, I beg your pardon, the market reject this specific area, bouncing off, reversing the trend. That is called a double bottom pattern. Let's move on with the third one. Well, last but not least, we're gonna go through the double top, which is going to be the last pattern of the reversal family I'm going to be showing to you today. This takes an M shape, given that it's trying to break that resistance area for two times. Well, at the first time, it's going to be rejected at the first point of resistance, and at the second attempt as well is going to be unsuccessful. However, on the second attempt being unsuccessful follows a change in direction for the asset or financial instrument that you're actually trading. Let's move on and check it out on a real chart. Well, here we are on Great British Pound, Japanese yen, 5 minutes time frame, and I can show you that on this, in here, there is an M pattern, which we call double top. Double top, why? Because it's trying to break this very key level, however, very unsuccessfully. There's going to be uptrend reaching the level of resistance being denied, coming down, try again, being denied once more, and then reversing. This is called the double top and is a very powerful reversal pattern. Well, said that, we will go through the continuation pattern and see how they actually behave on a real market. Let's move on. Well, starting on with the continuation family, I would like to start talking about the pennant. Well, the pennant, it appears between two trend lines which are trying to converge. Well, the main characteristic, therefore, is the two trend lines have different direction, and the more they converge, the more the volume is decreasing till the breakout point when we want to enter the market and gain that earnings. But let's move on the real chart, and I'll show you how it's constructed among a real currency pair. Well, I've already drawn the two trend lines, and as you can see, one moves down, one's moved up. They are trying to converge. Volume is decreasing till the breakout point where we want to enter the market and gain profit. Well, this is the pennant, pretty easy to spot and to understand. For the second one of the continuation family, I would like to introduce you to the cup and handle pattern, another good scenario and setup for you to get potential profits. Let's move on. Well, the last pattern I want to talk with you about today, and in regards of the continuation family group, is the cup and handle. Cup and handle is a continuation path that is usually found when the market is on a bullish trend. Well, in this case, the bullish trend has paused, and when the pattern is confirmed, we will have a perfect entry point to get some profit going. Well, the pattern is subdivided into two main drawing. The first one is the cup, which has like a U shape, and the second one is the handle, forming kind of a V, where you can see like actually a handle. And then when the handle is breaking that resistance level, that is the point we want to see and enter the market for new profitable earnings. But let's move on a real chart, and I will show you how it actually is built up. Well, in here as well, Great British Pound, Japanese yen, and here I can show you on 1 hour time frame that this is a great upward trend. Let me place this trend line in a nicer way over here, and you can actually see that the trend can be spotted over here, and this is the U that we are looking for, the cap. This one instead is the V point over here, the handle. Well, here is the resistance level that once it is broken out, so we can see U here, handle here, till the resistance level over here, enter over the breakout point, and in this case you would have gained 1,185 US dollar for 1 day trading. Well, I believe this is a great scenario to trade and great opportunity to see new potential earnings increasing your account. Well, for today, I would say that I'm very thankful for you following this video and following our academy. And let's move on to conclusion. Thank you very much again. Bye.
Well guys, if you like the content of this video, please do not hesitate, come and visit our webpage, social media on Facebook, Twitter and Instagram. Press like and subscribe for our weekly webinar. I promise you, you won't regret it. For today it's all, and I wish you a happy day trading. Bye bye.